Today, we're going to get the fall market update from agent Kayla on Niagara. So what's going on in Niagara today?
Lots, so many things. In the market, I would say lots of deals if the numbers can work. Some trends that don't exactly match previous years. So this is all of our opportunities on the res side.
These are really great. I mean, there's obviously, some great creative financing in a lot of these. There's, multiple exit strategies, potentials for additional dwelling units, opportunities for house hacking. This is like literally the Canadian real estate channel in a slide. So thank you very much for sharing that with us today.
Commercial.
The Iron Street deal looks really nice. Like to me, just personally, that fits my investing strategy. All right, everybody, welcome back to the Canadian Real Estate Channel. I'm Adam J.D. Martin, and today we're going to get the fall market update from agent Kayla on Niagara. So what's going on in Niagara today?
Lots, so many things. Today specifically, it's hot and raining, but in the market, I would say lots of deals if the numbers can work. It's a bit slow like it is everywhere else in terms of transactions, and some trends that don't exactly match previous years, even pre-COVID. But let's jump into it and we can chat. All right, so on the left-hand side, so this is for the residential market. It's showing all of the areas in Niagara, so all of the little cities. Listings this year, listings last year, sales this year, sales last year. So something that's kind of interesting, we're hearing a lot about how slow the market is. If you look at the totals for number of new listings, we're up a bit, but not substantially, about 200 listing difference. But it's the number of sales. So again, we're hearing sales are down, way down from last year. They're not. We have 399 from last year and 372 from this year. So those numbers are very similar. And then finally, we're into the point where we don't have to say prices have dropped $1 million from last year. If you look at the HPI benchmark price, it was, about $8,000. So we went from a benchmark price of 659.8 to 651.7. And then average days on market actually stayed the same. And there's a few different reasons for that. I would point out that people are now marketing and listing, expecting it to be listed longer. There's very few holding offers. The only time that I'm really seeing it is houses that are, like there was one that had a fire in it. So obviously you need to get a lot of attention on it and it's going to be only a specific type of buyer. And then those that have a sale of property condition on the house that they've purchased. So they are in a time crunch on the house that they need to sell.
Awesome. Yeah. And I know on your last update video, you were experiencing actually quite a bit of inventory just sitting. Like there was a lot of months of inventory. And would you say that has actually changed, or is that kind of similar position?
Adam, just wait for the next slide and we'll get right into it.
Okay, let's do that. Let's talk about it.
I did want to point out just month over month here, just because there was some interesting changes there. Niagara totals for new listings went up about 140-ish. Number of sales was down from August to September, which is a little bit out of the norm. Usually we see the market start to pick back up in September. Fall market, we get a lot of listings, usually an influx of buyers. Anecdotally, it seems like it's because people were waiting to see what the rates were doing. People were kind of trying to feel out the market, feel out, their budgets and whatnot. So That's what we had heard. Also, people took a bit of an extended summer vacay. The weather held quite nicely this year. I mean, it still is. So we did see a lot of people still enjoying the weather. And then we also saw a price decrease, which is also very out of the norm. Usually we see kind of it go like this for the summer and pick back up in the fall. I'll be very interested to see when October stats come out, how it looks. And then average days on market went up in September. So, all right. So this has Niagara and Hamilton. I'm only going to speak to Niagara here. It was just for comparison purposes. But on the left, we have the median sales price. So you can see what I was talking about at the end there, where, you know, it drops and it didn't pick back up. Hopefully for October, we start to see it. The drop did decrease, like the percentage, but it's just still not picking back up. But month's supply of homes for sale. So to your point, Adam, just for people who don't know, this is if new homes stopped entering the market today, it would take X months for buyers to buy all of the homes currently on the market at the pace that they're buying. So you can see that Niagara has 5.3 months of inventory, which is so many months. Quite a lot higher than Hamilton. Our days on market are higher than, you know, this kind of for this area. And that is a lot of inventory. You can see at the peak of COVID, or the market for COVID, whatever we're calling it, it was less than a month, 2 weeks. So very different climate, even pre the market shifting for COVID. What this means though is there's a lot of opportunity to negotiate, tons, because there is so many more opportunities for buyers. There's obviously a lot more inventory. Sellers are willing to do a lot more to make their house attractive because they realize in this market they have to. So yeah, that is that for month supply. Any questions about that, Adam?
Well, no, but yesterday we were talking on another market update, and I think it's worthwhile to bring up on this video if anybody, you know, is just following this market in particular. I shared sort of my situation on a building that I'm looking to sell right now, where I'm having this like cash flow crunch where I actually need to get the cash flow. So I'm prioritizing speed and convenience over price. And so there's a really great opportunity right now for buyers to approach someone like myself, a seller avatar like myself, who cares more right now about the actual speed of getting the cash back in the bank than the actual price itself, or even the terms surrounding it. So I would suggest that buyers, because this is obviously indicative of a great buyer market when you see months sitting there. For buyers, like, get creative, right? So someone like myself, like, you could make me an offer right now where maybe, you know, I get some money up front, or maybe you get really exciting terms. Like maybe you get access to my building sooner than the closing date to start doing improvements. Maybe you want to, maybe it's the interior or exterior that you want to start altering right away, so that by the time you close, you already have the building in a position where it's either more rentable or more valuable than what it is right now. And a seller avatar like myself is going to jump on that right now, just knowing that you can meet either my price or meet my closing date that I'm targeting. So, you know, there's so much opportunity right now from the buying perspective to take advantage of those little details, as long as we can stay creative and approach this from a position of strength and leverage, where, you know, like, hey, the reality is you might actually be sitting here for a little while on the market, and there is a lot of inventory for me to select from. So those little defects that you have, I might just be able to go to the next listing and not have that defect. So what sort of terms can you give me, or what sort of price can you give me to deal with that fact, right? And I think that's, as buyers, we need to be very aware that that's on the table right now. And I think it should be explicit. Like, this is a red alarm for buyers to be making creative offers.
Yeah, I love that you said that, because it just brings us right to the next slide, and the two actually previous. So I agree with you. I think that, like you said, sellers are willing to give a lot more than in the previous market, of course, but even more so than what we had seen. And we're seeing and writing the most creative offers we've probably written for years, just because the opportunity is there. Buyers are kind of in the driver's seat. Obviously, if there's a very sought after home at a good price, it's still getting a lot of action. But in terms of the other ones, there's just a lot of room to do creative things and get great prices or great terms or whatever it is. I'm going to go into this very quickly. So this is for the commercial market. Those were for the residential market. So this is for multifamily 5+ units. I just wanted to point out a few things here. So this is for the Greater Golden Horseshoe. This is a program called CoStar. If you're not familiar with it, if you've ever seen a commercial deal and went, where the heck did that come from? It lives in CoStar, not in realtor.ca. It's like a whole other world. But what it also allows us to do is pull stats like this quite easily. But I wanted to point out the vacancy rates because I think that that's important. And I mean, you hear it vary across the board. This is for anything in CoStar, so these five unit plus buildings. The 4 and 5 star with the 2.4% vacancy rate. So those are usually your buildings that had been built recently. So it's the 4 and 5 star are based on the quality of the building itself. Older buildings tend to have lower stars just because obviously they have their own issues. But I wanted to point out that the 3 star and the 1 and 2 star ones, the rents are a little bit lower. Obviously they're not like luxury apartments like the 4 and 5 star ones are. But a vacancy rate across the board of 1.1, this is quite good if you're filling units. And again, anecdotally in the Niagara region, we fill quite a few units because we work with a lot of investors. So we do a lot of leasing too. And some cities are not quite as busy. So Welland, just because there was an influx of units when everyone was doing conversions, it does take a little bit longer to rent apartments there and get quality applications just because there is a ton of choice. But we just listed one of our units in St. Catharines and one of our units in Niagara Falls, and I cannot keep up with the messages. And both are about to be rented to very, very, very A+ tenants. So in terms of finding tenants, it's a question we get a lot. It doesn't seem to be a huge barrier in terms of timelines and getting them in there and getting market rents and those A+ tenants. So I did want to make sure everyone is aware of that. The pool of tenants seems to be shifting, but you can still absolutely get fantastic tenants. The other thing I wanted to point out here, the vacancy change is there, which is helpful, but the asking rent growth and the effective rent growth. So this is year over year. You can see that rents, as we know, are still continuing to climb, and we suspect will continue to do so. And this can be pulled for, like this data can be pulled for any market, big, small, US, Mexico, from this program. So yeah, if anyone has any questions about CoStar, definitely reach out to us. And then exactly what you were saying, Adam, key opportunities. So for the res side, what we're seeing, 4 units or less, 3 to 4 units, market rents or vacant. And to Adam's point, we are seeing sellers more willing to keep vacant units to sell or work with the current tenants to get units vacant, whether it's through cash for keys or moving them into other units that they have. We've seen a lot of that lately. Flips and conversions, I put an asterisk there just because it's a controversial topic right now. But we've seen, and actually just firmed up on a deal yesterday of almost a full BRRRR for a conversion, almost. Awesome. Very, very, very close. And I'm writing an offer today for a full BRRRR. So because sellers are willing to let these things go at very favorable prices, there is the opportunity for that. Are you going to experience some cash flow shortage while you are working on it? Yes. But realistically, once it's rented, if you have a little bit of cash flow now, you're going to have a lot of cash flow once the rates get a little more favorable, whenever that is. And I recently saw a flip that I probably should have bought. It was a house in a good neighborhood in St. Catharines that sold for $300,000. And I haven't seen a renovated house there go for less than $550,000. So wow. Yeah, the spread was there.
Yeah, like I love this slide because there really is a lot of opportunity during these times. And I think people do just get a little bit hesitant. There's a lot of fear, uncertainty, doubt about, where the rate's going to go, what's going to happen to the prices. And that type of question certainly comes up a lot. But one thing I like to think about is like, if you were willing to justify paying the prices, you know, you see the charts, right? You see the
Yeah.
stats from 2021.
Yep.
If you were willing to justify buying those assets at those prices and under those market conditions, I think you just really have to be critical about your decision matrix right now about how you're
Mhm.
calculating risk, because a lot of people now see more risk, whereas I actually see a lot more risk in 2021,
Yeah.
where you're hitting historical prices and like literally setting records for growth and like minimal days on market, high pricing, and just no inventory. So like for me, it's the interest rates changing is just a reality that you kind of have to factor into your spreadsheet, but it doesn't really change how you should be calculating your risk. So for me, it's like, yeah, this is actually the best possible time for negotiating if you're buying. Now, if you're selling, obviously, I think you need to focus on, you know, what's in your control that you can
Mhm.
actually change to be a more attractive listing. Like maybe you
Yeah.
do need to do the staging, maybe you do need to like actually do the paint and like the cleaning and like some of this
Yeah.
simple stuff that can help you be more attractive and actually get people through the door. But like,
Yeah.
you know, vendor take back mortgages, we were negotiating dozens of those when the
Yeah.
market was hot as hell and people really didn't have a reason to give you a VTB.
Yeah.
And so now asking somebody and them having the understanding that there's fear and uncertainty and doubt in the market and being more willing to give it to you seems natural to me. Like
Yeah.
I wouldn't even make an offer right now without some kind of vendor take back.
Yeah.
And like, and asking for these different things, like, you know, vacancy right now would be super valuable because we know
Mhm.
rents, market rents are great still, and that's not going anywhere. And honestly, I'm actually really surprised about the stats you showed on the previous slide for commercial. Like, I don't think you realize how exciting those stats were. You're like, oh, we're gonna go over the commercial stats, but those are badass stats, man.
Yeah.
Like 1% vacancy in your
Yeah.
commercial units, that's insane to me. Because like the problem is there's this narrative, right, that it's scary right now. But if you just look at the numbers, like the stats don't actually lie. If there's a 1% vacancy rate, that means it's not that scary, right? And sure,
Yeah.
the market could be changing as we're talking about this. And yes, we're always using lag measures, but like seriously, an average of 1.2 there. So we want to be accurate, but you know, an average of 1.2 across the market, like, damn, that is a very low vacancy rate, in my opinion. I mean,
Yeah. Oh, I mean, I agree with you. I think part of the thing is we do see a lot of the horror stories, obviously, about being a
sure.
landlord. And I have a lot of people that are like, you know what, this is not for me. And that's totally fine. It isn't for everyone. It's fun when it's fun, and when it's not fun, it's terrible. But this is a good indicator that, you know, as long as you're doing when we screen our tenants, we're doing like extensive backgrounds. I can
Yeah.
go, it's actually, tune in for next month because I'm going to go over it. But it really does indicate that, like, if you put in the work, and I find it's really a speed thing with placing tenants because they get bored and they move on very quickly. But if you are able to do it, it pays off. And obviously, if you're into the more luxury stuff, it's going to be a bit longer. But
Well, the thing is, like, you at home, I'm
yes,
talking to you. You're not buying 4 and 5 star buildings right now, right?
yes,
If you're watching this right now, you're watching the Canadian Real Estate Channel. You're probably buying the 1 and 2 star or the 3 star, and that's great because inside those businesses, you can see right now the asking rents are really comparable to
yeah,
the 4 star and 5 star, but your vacancy rate is actually less than half. And there is a lot of supply there. You can see there's a lot more units in that, but the
mhm,
vacancy rate's holding.
yeah,
So that to me suggests like you're actually in a really strong position right now if you were considering doing a building. Like I'm working on a building right now where
mhm,
it's the 2 store, it's the typical main street downtown, 2
mhm,
commercials on the bottom, 3 residentials on top. So you're super insulated, right? Because your residential rents are very strong right now and vacancy is very low. And then these commercial stats, if you're looking to buy in this area in Niagara, like, wow, because that just means that any fear you might have gotten from the media
yeah,
recently or from asking around, hey, how's it going? Like people are scared. But don't forget, these businesses are also employing people, right?
mhm,
Most of Canadians are employed by small businesses. So like if these stats are similar even in across various cities, like that's a pretty good outlook for the future. Like it's not as scary as it sounds when you turn on CTV and it's like, oh my God, the sky's falling.
it is pretty
So
if you watch the
that's
news.
awesome.
And then to your point, the VTB, the other thing I'm seeing a lot of is the assumable low interest rate mortgages, with the caveat of you have to be able to get approved by the bank. It may not be the amount that you need, but I'm going to use a specific example. There's a triplex up for $1 million. The rents are at market rent, but there's an assumable mortgage of, I believe it's 1.59. $632,000, which if you're buying as an investor, it's not a far spread from what you have to put down anyways. And you're getting the interest rate, and it's good till the end of 2025. That's a substantial amount of time.
That's awesome.
That low interest rate. And I've seen, so what we are able to do in Matrix and on CoStar is search like assumable low interest mortgage rate and see what comes up, or a variation of those words, and see what comes up, and a ton pop up. So not only is this an opportunity for investors, but also if you're an end user, like there was a house near me that was, I mean, it's worth quite a lot more than my house, but I was like, our payments are going to be the same. So should we be buying this?
You know what? I'm really glad you brought that up, because we talked about this yesterday on another market update, where your avatar right now of buyer might actually be changing, because to your point, what a deal if somebody's in a position right now where they've got a house and they're kind of struggling to hold on, and they think, you know what, maybe I need to look for an alternative. And all of a sudden they start looking, and you know what, this triplex, maybe it's slightly different living style, but I have two people paying monthly that help me pay that mortgage. And when you walk into something creative like an assumable mortgage, all of a sudden, like, man, that could make a lot of sense for somebody who needs to change their situation and is looking for that alternative. It's very hard if you actually think about how you would go about getting the type of revenue that those two rental units would be producing. Let's say they're on somewhere near your average at maybe 1,800 each. That's $3,600. How do you do that? Well, that's another full-time Canadian salary. Like, you better go have a kid, raise them to 18, take all their money, put them to work. That's the only other way, right? Or get a huge raise at your job. But like, if you could do that, you would already be doing it.
Yeah. So love those for the res side. I'm going to hop over to commercial. So 5+ units. I'm speaking to the 3 that are here. So for the buildings, I'm talking res, like residential units, but commercial because of the size. So buildings with 30 to 50% or more, I'm just less of a dreamer. Vacant units with reno opportunities. So we have a few of these listed. We're going to talk about them, but there is, like I said, a lot of opportunity for vacant units. Makes it a heck of a lot easier to get through CMHC if that's where you're trying to go. And it allows you to raise the value, because again, with commercial, raising the value, you're raising the income. So, and lowering the expenses. Obviously there's a few caveats to that, but anyway, so I think that there's a lot of opportunity there. Commercial to res, so the conversions, we're seeing a lot of commercial buildings. I mean, again, not everyone went back to work in the office. So office buildings are up quite a lot, even just like downtown St. Catharines where ours is. And then doing the commercial to res conversions, there's a lot of grants, there's a lot of different ways to get it done. And then mixed use with good commercial tenants in place, or the opportunity to place good commercial tenants. Like you were saying, there's a little less uncertainty in the commercial space. A little less fear, all of that. So if you have a mixed use building where you have those commercial tenants in there, and then you have the opportunity to float it also with the res, let's say upstairs, depending if like those main street buildings. So those are where I'm seeing opportunity on the commercial side. And then the number one question we're getting, repositioning. Is it a good time to sell an investment property? And as we said, the short answer is it might be. My opinion on this is, if you are repositioning, one, because you are underwater and it just doesn't make sense for you to keep it, or two, because you've changed your strategy, or you're moving into bigger things and you want to take out the capital that you have in a property and move it onto something else, then yes, I think it is. If you're cash flowing and it's a good property and you don't have any plans, I would say now is not exactly the best time. But if you're in either of those other two positions, or you're strapped for cash flow or whatever it is, I think it is. Things are still going at good prices, and you're still going to be able to pull out, I mean, of course, depending on how much you're leveraged, but a decent amount of money to either help yourself or put it into something else. So that's
here's a case study just for anybody thinking like, wow, really, would somebody do that right now? You look at myself. I've got other projects on the go that have the opportunity for these large lifts. So what we're talking about is like this commercial building that's mixed use, where I have the opportunity to place great tenants and really raise the value of that building.
Yeah.
I'm looking at now selling a building at
Mhm.
arguably a bad time. Maybe this is not the best time. Let's just say it's not the best time. And
Yeah.
who knows when the best time is, but let's just say this
Right.
probably is not the best. But what I'm interested in is recapturing my investment from that building that's already been made. So
Yeah.
what you're doing is maybe you're taking a little bit of that cream off the top, you're taking a little bit of profit out, but what you're doing is recapturing all that capital that you had deployed against that building that no longer suits your investment needs anyways. And that's how I look at this. Like, pick the building in your portfolio that is least suitable to your current investing strategy. That's the one that you want to, if you have to, that's the one you would sell.
Yeah.
And hopefully you redeploy that capital in a productive way. And
Yeah.
if you're underwater, like right now on that building, I'm cash flow neutral. So it's like, it's not really a pro or a con to me, but I know that with this other building, once those, I've got 2 units that need to be completed, the cash flow will be approximately $2,500 a month. So that difference is obvious.
Yeah.
And so, like, is it a good time to sell? Well, maybe not. But is it a good time to sell? Hell yeah.
Like, yeah, if it is for you, then it is.
Yeah. And so it's like, you know, could you get a better price had you sold in 2021? Sure. Great. Could you get a better price if the interest rates go back down to 3% in the next 5 years? Maybe.
Yep.
Maybe.
Yeah, we'll see.
The point is, what are you trying to do today? And then I think just selecting the best building in your portfolio to sell.
Yeah, absolutely. I also said, like, I was talking to an investor last week and I was like, they were like, we have one like duplex that we just don't like. And I have one too that I just am not a super fan of. And I'm like, they're like, I just don't know if I should sell it. It's not a good time. And I'm like, well, if you don't like it and it's like in the back of your mind that you just have this property you're not a fan of, then like, what do you have to lose if your plan is to put it somewhere else? So yes, I 100% agree with you. It might be, if it's a good time to sell for you, then it's a good time to sell. And that's the answer. All right. Now, is it a good time to buy?
Okay.
Yeah, so I'm not gonna go through all of these in super, super great detail, but these are all investment properties that our team has listed. We have a bunch. I'm gonna go res, commercial, and then off market. I'm gonna start with 24 Herrick. So this is a fully tenanted triplex with 6 parking spots, 2 3-bed units, 1 2-bed units. There is Coin Laundry. It's right down the street from a new build development of houses, but also condo that's going up in St. Catharines. Total gross rent $64,500. Expenses $8,897.17. I'm gonna let everyone else do the math on that, but it's pretty darn good. In terms of location, I would say up and coming, C+, B-, depending on your thoughts because of the condos and stuff that are going around. Close to the highway, pretty much close to everything. Tenants are good. This is just a easy cash flowing asset if someone's looking for that. Adam, just interrupt me if you ever have a question, because I'm just going to rapid fire these.
I'm good to go. Keep going. Yeah, I think I love how you have it laid out so that everybody can see the numbers here. I think that's really, you know, that's what we want to see.
Yes. So 5,000 Bridge Street, Niagara Falls, 779.9, 2 2-beds, 2 1-beds, zone GC, which means it allows for short-term rental, aka Airbnb. Everybody wants to do that in Niagara Falls for good reasons. We do as well, and the numbers are great. 1 vacant unit, currently extensive update list, redevelopment opportunity, and there is permits for storage in the basement. So if you're looking for that additional cash flow piece, that's where it is. 7 Maitland, this actually got listed today. This is in Thorold, downtown Thorold, close to everything that Thorold has, schools, a very small downtown, but Brock University is very, very close to there on the bus route, St. Catharines, all that good stuff. 799.9, 1 3+ den unit, 2 spacious 1-beds. It's completely vacant. It's on a large lot in terms of depth, so 33 by 132. Extensive upgrade list. The basement has been fully renovated, and then the other units have had strategic renovations. I wanted to bring this one up just also because of the multiple strategies. So a lot of people are interested in having the ability to diversify even a single 3-unit. So this one, again, you are very close to Brock, so you can do the student rental piece. Rooms are going up and up and up because a lot of landlords sold their student rentals during COVID because of the prices. So anyways, student rental, long-term tenants, midterm, because you do get a lot of professors and that type of thing that are there. and then you are allowed to do short-term rental in Thorold. We have a few, and they do quite well. It's an array of people that visit. We get sports teams and events and all sorts of things, weddings, Niagara on the Lake. For whatever reason, they're there. So we do, like I said, a few different strategies on that one that we like. Back to your VTB. 160 Welland Avenue in St. Catharines, 749. So this is, there's two bedroom units. One is vacant, one has long-term tenants that take absolutely the best care of their unit. There is a large 3-car garage in the back, so potential ADU opportunity for anyone that's looking to do that. We put buyer due diligence obviously required here because you have to go through the city. Up to a 50% vendor take back opportunity, and then assumable mortgage opportunity here as well. So kind of,
wow.
Yeah, two birds, one stone there.
Yeah, double dip.
Yeah, so could be very favorable for investors, just depending on their strategy and how they approach these things. 46 Commercial Street in Welland. So this is a legal 3-unit. Tenants are at market rents. $799.9, and the opportunity to convert a large 2-car garage into an ADU. Buyer due diligence required, but I will say we have spoken to an architect and they said there would be a minor variance required, but otherwise should be good. And I don't know if whoever's familiar with Welland, ADUs have been quite popular there. We've worked with a bunch of people that have done them in the houses that we've helped them buy. 1861 Main Street, 644,999. It's a single family with an in-law, upper 2-bed, lower 1-bed. Vacant, extensive upgrade list. Most importantly would be interior and exterior waterproofing with a long time warranty. It's a great house hack opportunity for a first-time buyer trying to get into the market, trying to supplement their income and their expenses. This is what I did when I bought my first house. And I actually lived in the basement and rented out upstairs, just kind of vice versa. And then 8077 Aintree Drive in Niagara Falls. So 659.9, a backsplit semi with an in-law in the basement, upper 3-bed, lower 2-bed, fully renovated and major upgrades, notably windows in 2022. They are very expensive. I know this because I'm getting mine done. And this is a great house hack opportunity, or there are 2 very good tenants in there right now. So the opportunity to just buy something in a very good neighborhood and kind of let it sit. So this is all of our opportunities on the res side.
Awesome. Some of these are really great. I mean, there's obviously, some great creative financing in a lot of these. There's, multiple exit strategies, potentials for additional dwelling units, opportunities for house hacking. This is like literally the Canadian real estate channel in a slide. So thank you very much for sharing that with us today.
No problem. So anyone who has questions about these, reach out to us. We are happy to give you information. Commercial. Okay, so I'm going to start on the left again. 4058 Fly Road in Camden. Camden is a lovely little town kind of between Hamilton and the Niagara region. It's a residential building lot. 439.9 is one of the cheaper ones in the area. 6297 by 130. So you are still getting a very good size lot. Services are at lot. Severance has already been done. It's ready to go for any of the builders that watch this. This could be a good opportunity. There's a lot of luxury homes in that area. You can look them up if you want information on them. I can send them, but this is definitely a good opportunity for those types of investors. 42 Division Street in Welland, 609. So this just had a pretty substantial price drop. It's a 5,600 square foot mixed use, downtown Welland. It's like steps to the water. The building right beside it just had a complete facelift and sold for 903, and it's just commercial, 2 units there. So we've confirmed with an architect 6 res and 2 commercial units are possible here. Again, buyer to do their own due diligence. It is completely vacant as it stands, and CMHC opportunity, we have the pathway through that, what it looks like. If you are interested in seeing that, the numbers and whatnot, we can provide it for you. But this is an opportunity for someone that's willing to take on a pretty massive rental with obviously quite a lot of upside.
And so can I just confirm there, did you say that the building next door sold for 9 and it is only 2 commercial units?
It does. It has a basement. This one doesn't. So there is a caveat of that. And in the basement
okay.
But
that seems like an interesting opportunity, right? Obviously, this building has significant opportunity if you want to do the work to make that lift be a lot more than, well, potentially a lot more than the 9.
Yeah.
That's
So
cool.
we do have the appraisal for this. It is an old appraisal, so obviously the numbers are from when the numbers were insane. But nonetheless, I think it's still helpful to kind of get a feel for what an appraisal looks like in the first place, but also what they're looking at. So when you're doing the reno, you can refer back to it. Okay, I'm going to go to the middle now. So 303 Indian Valley Trail in Mississauga. If you're familiar with Mississauga, you are aware that Mineola is one of the most sought after areas in Mississauga. 3759000. So there is a house that stands there, but it is a massive L-shaped ravine lot. It's exclusive and highly sought after the area with quick access to Toronto and Pearson Airport. Redevelopment opportunities. There's a possibility to sever here, buyer due diligence. And it is settled amongst many multi-million-dollar 5,000 to 10,000 square foot homes. If you drive down the street, it's insane. So for, maybe the more luxury builders that watch this could be an opportunity to build not one, but maybe 2 luxury homes in an area that, has no problem selling at the multi-million-dollar price tag. 7 Iron Street in Welland, 1899900. So it's 10 units. It's 1 3-bed, 4 2-beds, 1 plus den, and 4 1-beds. Rental income is $147,643.80, with the caveat of there are currently 4 vacant units and market rents are factored into that number. Expenses $46,847. This includes property management. There is coin laundry, ton of pretty notable upgrades, including electrical service line was upgraded, all separate hydrometers. There's an intercom right to the tenant's cell phone. All the tenants are great. And it is across from some major developments. So there's a new commercial building going over there, and there's also a whole new residential area that they're building. So there's an argument here that obviously this area, as it is turning around, is going to continue to do so with all this new stuff that's being developed there. And there are going to be a lot of jobs brought into the commercial building that will be there. I like this one. Again, this is when we ask ourselves, is it a good time to sell? Well, if you're selling something smaller to get into something, let's say like this, then it makes a lot of sense, because obviously your cash flow is a lot higher here. You have more units, you're less exposed to the elements if you have a vacant unit here, because there's quite a few. So that is Iron Street. And then 45 Main Street West in Huntsville. This one's unique. $799, cottage or house. It's a duplex. Commercial and residential zoning, fully tenanted to a reputable business nearby, 3 beds up, 2 beds down. Currently $42.50 in rents plus hydro, views of Hunter Bay. And it's a possibility of Airbnb, house hack, live in business, and everything in between.
Awesome.
Questions?
Yeah, that's great. The Iron Street deal looks really nice. Like,
yeah.
To me, just personally, that fits my investing strategy. I think I have a 24 unit building like somewhere near there.
Oh,
and those unit prices are pretty nice. Like, there's lots of room to expand on that and get a lift. So cool.
Yeah, so that is that one. And then these are our off-market universities. Oh my dear God. Opportunities. These
deals. Just say deals.
6874 Waters in Niagara Falls. So this is a semi-detached raised bungalow, 549.9, 3 beds up, 1 bed down, in-law. The only thing that's required to completely split it would be the door setup when the stairs go up and down. It's a great neighborhood and it has many updates, and it's perfect for house hackers or multi-generational living. 4732 3rd Ave in Niagara Falls. So spacious, detached, open concept bungalow, walk up from a high basement, potential in-law or conversion. Perfect for house hackers, investors, again, that multi-generational living, which we are seeing more and more. We're also seeing friends do that now because of the housing prices and the interest rates. And this one is very close to the falls, Clifton Hill, and all of the good stuff that comes with Niagara Falls. Haven't landed on a price for that one yet, but reach out and we're happy to give it to you. And then 554 John Street in Hamilton. So this is a 14,000 square foot, 7,000 on each floor. Expansive parking lot. If you're familiar with Hamilton, you know that they are doing a massive revitalization of the waterfront at the bay. This is very close to there. It's close to the marina. We see highest and best use as redevelopment through apartments and or stock towns. Buyer to do due diligence. But there are a few different ways. The nice thing about this is there's the current building. There is a tenant on the main floor, and there's 7,000 square feet upstairs that is currently vacant. Rent it all to help carry the cost during the permit processes. And as soon as you have those, then move into the redevelopment, which there's also like a massive, I think it's 20 story apartment building going in across the street. We're going to see condos and detached and towns at the waterfront, again, a walk away. So as this happens, more and more is going to come into the area. And again, if you're familiar with this area, it's already, I mean, the north end of Hamilton is one of my favorite areas in Hamilton, but this just offers, this is obviously a bigger investment strategy, but for people that are looking to do that, this one could be a good one. And in terms of pricing, again, landing on it, but reach out to us and we're happy to work that out with you.
That's great. That's definitely a reason to come back for more of these market updates, guys. Off-market opportunities. You know, that's how we all got started here. So that's exciting. Thank you very much for sharing those with us.
Yeah. So that is that. Questions, comments, concerns, Adam?
No, not for me. But if you have a question at home, please leave it down in the comments, or please reach out to Agent Kayla here. And all her contact information is here, as well as in the description below. So yeah, I really thank everybody that spent the time today to come and check up on this. I know Kayla's been doing great videos with us for a long time, and it sounds like we have more exciting content to come. So I do want to tease a future video right now. This is a good call to action time.
Yes, I've already started on next month. I'm going to be walking through everyone through. I'm going to be dishing out secrets about our tenant screening process and what we're personally doing to set ourselves up for a big investment year in 2024.
All of you leave comments and write to us and DM me and DM everybody else that I know about how to screen tenants, because tenants are arguably the worst part of investing in real estate. But they are also the backbone of your business. So you better know how to damn well do it. And Kayla's going to tell you how. So please, guys, stay tuned for that. We'll let you know when it happens. If you don't want to wait for us to let you know, hit the notification bell up top. You already know how YouTube works. Just do it because you haven't done it yet. And leave us a comment. If you guys have any questions that you want us to cover on the next videos, we're more than happy to respond to those comments and work your question right into the content. So again, this is Canadian Real Estate Channel. I'm Adam J.D. Martin. This is Kayla. And yeah, we'll be right back soon with more content for you.
Thanks, guys.